CNBC-TV18.
It's the year Russia invaded Ukraine and rattled the world. It's the year Argentina made history by lifting the Football World Cup. It's the year thousands took to the streets to protest Iran's morality police. It's also the year that nearly broke the back of cryptocurrencies. It's the year Finfluencer and Fitspiration made it to mainstream English. It's the year China tightened and then eased its harsh COVID restrictions. It's the year Japan's Abe Shinzo fell to an assassination attempt and Pakistan's Imran Khan survived one. It's the year inflation rose around the world, prompting central banks to go on a rate hiking spree. It's also a year a lot of the world limped back to normalcy after 2 years of lockdowns. As 2022 winds down, let's take a look at some of the seminal moments it has given India's economic and financial history. I'm Shireen Bhan and this is Rewind 2022. For many, the 2 years of the pandemic forced restrictions meant pain, but one sector thrived, the Indian IT industry. Orders were up, dependence of tech support increased, and profits were higher. So was hiring, often leading to bloated teams and benches. All of this changed dramatically in 2022 as the recovery exposed gaps in the IT boom. When the dust settled, rate hikes to curb runaway inflation sparked fears of a recession in many parts of the world. And so the strings holding India's IT story together started showing signs of fraying. Across the globe, tech giants lost trillions of dollars in market cap as the big tech sell-off accentuated, and shell-shocked companies started laying off thousands of employees across the board. Some of the smaller players have even ceased to exist. CNBC-TV18's Reema Tendulkar recaps the brutal year that 2022 has been for the tech sector.
It's been a brutal year for tech giants around the world. Apple stock is down about 18% so far, and it is one of the better performers. Facebook owner Meta, Amazon, Netflix, Google's parent company Alphabet have all fared far worse, with Meta plunging nearly 65% this year. The other tech giants of Nasdaq, chip giant Nvidia, Elon Musk's Tesla are also down massively so far in 2022. What's hurting? Rising interest rates, macroeconomic uncertainty and global pressures. Recession worries are hurting Amazon and Apple, and concerns about a strategy shift. For example, Meta going all in on augmented and virtual reality, Netflix embracing advertising for the first time ever is also hurting. Let's talk about what happened back home in India. Now, 2022 has marked a sharp decline in stock prices of Indian IT giants as they moved in step with their global counterparts. As things currently stand, this year could be the worst year for Nifty IT since 2008, when the index was down close to 55%. The reason? PED rating, as global interest rates went up, and then there were some EPS cuts as growth forecasts moderated. TCS is now trading at a forward multiple of 25-26 times. The peak was 32 times, and the list goes on, with Infi, HCL all trading at a much lower valuations compared to their peak. The worry is also about what next year holds. Analysts estimate that growth will slow down further. Nomura is saying the US dollar revenue growth to slow down to 8% next year versus 12.7% in FY23 for the big companies. The next big story of 2022 were the tech layoffs. Now, according to a layoff tracking website, layoffs.fyi, data as of mid-December shows nearly 1,000 tech companies have laid off close to 1.5 lakh employees. And that includes biggies like Meta, Google, Amazon. They've laid off thousands of employees. And the question is, will this belt tightening continue next year? And the answer is probably yes. Many companies which have not announced their job cuts yet are likely to do so next year. HP is looking to pull back on its workforce. Reports suggest Google is looking to axe about 10,000 employees next year. And here we're only talking about the multinational tech giants. There are so many smaller startup companies where we are seeing some big job cuts too. But the biggest newsmaker of the year for me is Apple, which moved its iPhone 14 production to India. Now, Apple has been assembling smartphones in India since 2017. But up until this year, Apple used the manufacturing facilities in India to assemble the older generation handsets, the legacy models. This year, 2022, was the first time Apple produced the latest smartphones. They produced the phones as the same year as its release, just a few months of lag compared to China. And the story is we've just gotten started. According to JP Morgan, every fourth iPhone will be made in India by 2025. What's the driver of this big shift? China unrest, reduce your dependency on China, and an affirmation of India's PLI scheme. According to India Cellular and Electronics Association, India is likely to export handsets worth $9 billion in FY23 versus $5.8 billion in FY22, a whopping jump of 55%. And this is the big question as we step into 2023. Can India become the new smartphone manufacturing factory for the world?
Euphoria, scandal, meltdown, contagion, bankruptcy, manhunts, arrests. If it's drama you were looking for, the cryptocurrency ecosystem had it all. When it began, 2022 was seen by many as another year for the crypto asset story to stamp its dominance as an asset class of the future. Many companies and major banks, even a government or two, started putting their might and their money behind these blockchain assets. But as the macro situation took a turn for the worse and financial markets stumbled on the tremors of uncertainty, the house of cards has come crashing. Frauds were unearthed, exchanges and funds closed down, regulations become stickier, and the entire business model has come unstuck, leaving investors and their virtual millions staring at real ruin. 2022 became the year that broke crypto's back. Manisha Gupta recounts.
The year 2022 witnessed the crypto winter loaded with sell-offs, scandals, layoffs, and unfavorable macros and markets. The shutdowns, rug pulls, and the contagions that followed made matters further difficult. The market is full of debt due to rise of centralized lending schemes. 2020 onwards saw a huge build-out in retail, yield-based DeFi, crypto shadow banking, and unsecured or under-collateralized lending. The pain started with a sustained sell-off in cryptos. For the current year, the prices have declined sharply, down by 60% for Bitcoin, Ethereum is down 64%, decentralized Mana is negative 88%, and meme coins Doge and Shiba Inu down 47 to 72%. The total crypto market capital hit peak at their $3 trillion, which has now come crashing down to below $1 trillion, a more than 70% of decline. The sell-off was accentuated by collapse of algorithmic stablecoin Terra USD. It was clear from the events that followed that the credit risks and counterparty risks were not assessed with vigilance. Down went the Celsius network, once valued at $20 billion. Same happened with Three Arrow Capital. Equinox, which was listed on Nasdaq, also shut shop. The other names like Vault, Voyager Digital met with the same fate. And towards the end of the year, the once valued at $32 billion FTX crypto exchange filed for bankruptcy, followed by BlockFi and Bitfront in Singapore. The other market, which is NFTs, and that was quite a rage and became a mainstream phenomena in 2021, also saw a meltdown in 2022 with volumes crashing nearly 70%. And then there is more, and this is from miners who, due to fall in crypto prices, have not paid electricity bills, leading them to sell their holdings. The total cryptocurrencies as of now stand at more than 10,000 in number, and in last 10 years, nearly 2,421 cryptos have failed. When markets started to fall, funds, lenders, others were forced to sell, leading to a domino effect. Street believes that 2022 may be drawing to an end, but the crypto winter could last another 6 to 8 months.
For the sector the RBI regulates, the year has brought with it a near paradigm shift in fundamentals. The pain from non-performing assets has died down to almost a dull throb, and it is now a season of healthy loan growth and profitability. Abhishek Kothari balances the books of 2022 for the Indian banking sector.
Well, 2022 has been a phenomenal year for the banking sector. Bankers have a reason to smile as they move away from the pain of NPA cycle to healthy loan growth and profitability. So talking about profitability, profits for the sector on a quarterly basis has increased from rupees 36,854 crores in Q2 FY22 to right now about 58,717 crore as of Q2 FY23. Now, factors that have helped in improving the profitability of the banks is improvement in loan growth and reduction in stress portfolio of the banks. So, loan growth for the banking sector as of Q2 FY23 was at 16.44%, perhaps one of the highest that you saw from 1st of November 2013. The rise in loan growth helped in stronger top-line growth for the banking sector, which has helped the bottom line or the earnings of the banks. So the loan growth incrementally has been driven by the retail segment. Now corporates have started to come back for working capital loans as money market rates have shot up through the roof. So capex-based demand going ahead may augur well for healthy loan growth rate for the banking sector. Stronger loan growth has also translated into healthy operating profit growth for the banking sector. Operating profits of the sector has grown from 97,383 crore in Q2 FY22 to right now a little under 1,15,000 crore as of Q2 FY23. Stress reduction. The banking sector has seen its gross NPA ratio decline from 7.4% in Q2 FY22 to right now about 5.24% in Q2 FY23. In value wise, the decline has been 15.2% YOY in Q2 FY23. The declining gross NPA amount wise has largely been led by the PSU banks. Now PSU banks gross NPA on a value wise has declined by 15.9% YOY, that is from Q2 FY22 to Q2 FY23, while that of private sector banks has declined by 12.7% in the same period. So PSU banks, the gross NPA ratio has declined by 256 basis points from Q2 FY22 to Q2 FY23, while that of private sector banks has declined by 119 basis points in the same period. Banks' balance sheet has strengthened with their core provision coverage ratio increasing from 69.7% in Q2 FY22 to right now about 74.6% in Q2 FY23. PSU Bank's core provision coverage ratio has increased to 74.9% in Q2 FY23 when compared to a little under 70% in Q2 FY22, and that of private sector banks has increased to 74.4% in Q2 FY23 versus 69% that they had a year ago. So for 2023, the loan growth could remain strong and could be in double digits. Net interest margin will continue to expand till Q4 FY23 results as loans are getting repriced faster and at a healthier rate. Return ratios will expand as credit costs will come down and stress in the balance sheet will continue its downward trajectory.
For the most part, 2022 has been the year Indian drug makers felt the shivers that come when a fever breaks. What does it look forward to in 2023? Find out after this short break.
The tests, they kept coming for me.